So welcome everyone to the first episode of Off the Block, 21 Shares new podcast, where we're going to talk about everything interesting in crypto on and off the blockchain. My name is Darius Moukhtarzadeh. I'm part of the research team here at 21 Shares, and I'm active in the crypto space since 2016. I'm joined by my co-host, Max Michielsen, who is also part of the research team here at 21 Shares. And before we go into today's topic and our guest, Alex, who's dialed in from London, just generally about 21 Shares. We are the world's first crypto ETP issuer. We are based here headquartered in Zurich, Switzerland, have offices in London and New York, and we have the largest product suite of crypto ETPs. Max and myself, as said, are part of the research team. We create a lot of different research materials, from our weekly newsletter to monthly, quarterly, half-yearly, and yearly reports. We are right now writing our next report, so stay tuned. And if you want to learn more about our research offering, go on our website on the Insight section, and you're going to find a bunch of different research materials, both beginner-friendly and for advanced.
When I talk about the research team and the work that you do, the fantastic work that you do, I often describe your team as the secret sauce of the company. I really think what the work that you do and that I've seen over the years has really made such a difference to many of our clients and to people in the market learning about crypto. So you do absolutely great work, and as far as I'm concerned, you are the secret sauce of the company.
Thank you very much, Alex.
So with that said, I think we can introduce the topic of today. And by the way, for those of you watching, we did not pay Alex to say that. Alex is not on my payroll, but thanks anyways for the big compliment. Joined by my brilliant co-host who gave a great introduction already, but let's introduce the topic. And today is a very big topic. We're going to be talking about crypto in the UK. And for the first time in many years, retail investors in the UK will once again be able to gain regulated access to the two largest crypto assets by market cap, Bitcoin and Ethereum, which is a slight shift from the FCA stance back in 2021. So this is one of the most exciting developments in the European market, and we're kicking things off today with someone who's been on and will continue to be on the ground as it all comes together. So joining us today is Alex Pollack, part of our sales and distribution team here at 21 Shares, and really our go-to guy when it comes to the UK market, seeing as, of course, he's based in London. Alex, you are our very first guinea pig. We're thrilled to have you. Why don't you tell us a little bit about yourself, your background, your journey into crypto before we really get started onto today's session?
So, Max, thank you very much, and very exciting to be joining you from London this morning. And I should add that I am very honoured to be your first guest on this podcast. Thank you very much. What an honour it is, and what an exciting time for us here in the UK. As you said, Max, I am part of the sales and distribution team here in London, and I've been with 21 Shares coming up to 4 years now. I joined the company back at the end of 2021 because at the time, the business actually thought that the regulatory environment in the UK was going to change 4 years ago. There were signs that things were moving, but then of course we had the crypto winter. We had all the shenanigans that went with that, and that meant that here in the UK, the FCA pulled back from lifting that retail ban. So I'm very excited that 4 years after joining the company, I can actually do what I joined to do, which is cover the UK market. I've been in financial services though for a long time, coming up to 25 years. So before joining 21 Shares, I was at BlackRock for 15 years. I held a number of roles at BlackRock. I can tell you that 4 years ago, I was very keen on getting involved in the crypto industry. I'd learned about crypto in the mid-20 teens. Through the work that I did at BlackRock, I worked with many startup companies, many of whom were looking at crypto, looking at blockchain technology. And that's how I first invested into Bitcoin. So in 2021, I asked the BlackRock management team what their view was about crypto, if there's something they were going to jump in and get involved in. And I was told from the very top of BlackRock that the answer was no. Crypto is not something that we're focused on. At the time, BlackRock was very focused on ESG, so environmental, social governance work. They thought that getting involved in crypto at the time would kind of muddy the message between ESG and crypto, and all the stories that were out 4 or 5 years ago about the impact of mining and the high energy intensity usage. And they said, no, crypto is not something that we're going to get involved in, and actually we don't think it'll exist in the long term. So it's very interesting kind of moving ahead to today that BlackRock has actually done a complete U-turn on that. They've done a 180. They're obviously very much involved in the crypto world and in the blockchain space. And I actually have to give credit to BlackRock for that. You know, they were growing up enough to actually change their minds. We know a lot of companies, when they make decisions, they often dig their heels in and they refuse to change their minds. So it was, I have to say it's very grown up of BlackRock to actually change their minds and actually decide to accelerate and get involved in the crypto space. And I think that's been good for the crypto industry. I think we can be grateful for that. But 4 years ago, the answer was no. It's not something we're looking at. And 21 Shares was looking to grow or develop their UK business. As I said before, they thought that a change was coming in the UK market. So I came on board. It's been a really exciting journey for the last 4 years. I've actually, because I've not been able to completely focus on the UK because things have been somewhat closed here, I've got involved in other initiatives. But I'm really excited now with the regulatory change coming that I can really focus 100% on the UK market. And I can tell you that as we approach the lifting of this retail ban, the market's getting excited. And so I'm excited that I can finally do what I came to do here. But I think from a 21 Shares perspective also, it's a very exciting time because I think the UK represents a very exciting opportunity for our European business. I think we have an opportunity to really help UK investors adopt crypto and put crypto into their portfolios. And I think in a few years, the UK will potentially be the biggest crypto ETP market in Europe as well. So exciting times.
That's a big statement. That's a very big statement. And Alex, I think maybe the timing was just waiting till our podcast goes live so you can talk about it on our podcast, which wasn't 4 years ago. So this could be a reason. But I think jokes aside, and I think you already touched upon a lot of the topics that we want to talk a little bit deeper during our podcast today. I think some very interesting statements. So I want to talk again of your reasoning why you think the UK might become the biggest market in Europe, which I think is very interesting and something we should talk about later. In terms of the podcast, we have one section which we're going to do with every guest going on, and it's the rapid fire questions. It's 10 questions that we don't share in advance, and they might slightly be different for every guest. And we want to kick it off with you, Alex, actually. And I don't know, Max, you want to take the first one? Should I take I go with the first 5. So some of the answers you already gave, Alex, but I have 5 questions for you, and Max is going to follow up with another 5. And
sure.
The first question I have for you is how did you get into crypto, or what was your first touch point with crypto in general?
As I said, in kind of mid-20-teens, my role at BlackRock as a country manager gave me the opportunity to meet with a lot of startups. BlackRock invested in startups at the time, and so a lot of it was focused on fintech. And I met at the time a few companies across EMEA who were looking at the blockchain space, who were looking at the crypto space from a trading perspective, from a custodial perspective. I got really excited by what these companies were doing. And what it did is it led me to kind of learn more about what are the origins of this. And I guess, cryptology has been around for quite a long time, but it really got me interested in the origins of Bitcoin, or what we know as Bitcoin today. I've been in the industry long enough to remember very well what happened in the global financial crisis, and how we saw some of our biggest banks collapse. And then I thought the emergence of what happened with Bitcoin and the whole debate around centralization and decentralization, very interesting. So I kind of went on my own journey and invested into Bitcoin back in 2018.
And I think you can already read our minds, because the next question I wanted to ask is, what was your first crypto purchase? I think you just mentioned it's Bitcoin. Can you maybe elaborate why Bitcoin? Why was it Bitcoin the first one? Because in 2018, Ethereum already existed, and some other tokens that are still relevant today. Why was your choice Bitcoin? And actually, it's nothing too crazy, because I think for most of us, I think it's maybe the same for you, Max, I don't know. But for me, most of us, we start with Bitcoin in the crypto space. But maybe on you, Alex, what was your reasoning behind choosing Bitcoin as your first investment?
I think it's going to be probably the same as most investors. So I did hold gold in my portfolio, and I really saw this as a store of wealth. And a good diversifier within my portfolio. I only took a small position because it was very volatile at the time, and you never quite know with these technologies and with these new developments, like if they're going to survive long term. And I guess I wish I had more conviction at the time to put more money in, and I think probably many people did. But it was really something I saw as a store of wealth and as a good hedge and a diversifier within my traditional portfolio.
And I think we're going to talk about this also later in the pod. The next rapid fire question I have for you is what's your favorite crypto asset and why? Is it still Bitcoin, or did it change? At the moment, or the last couple of years, I've really enjoyed learning about Solana. I think Ethereum is obviously, I think, a blockchain that a lot of institutions look at and have started using when it comes to tokenization or stablecoin evolution. But I've really found Solana very interesting, and I think it's really proved that I call it a rising star, but I think it's a risen star. I think it's already there. It's fast. It's got the ability to scale up. It's got low fees. So I'm excited about Solana, and it's where I've focused a lot of my own learning over the last few months. I think, Alex, you can really read our minds, because the next question I had for you is, it Solana or Ethereum? If you had to choose, you already talked about Solana. Is it Solana, or you would still choose Ethereum over it if you had to just pick one of them?
Yeah, I would pick Solana over Ethereum, but I still have Ethereum exposure as well. So I think you've got to have a bit of both, because I think both will have their space in the industry, and both will do well for different reasons. But I would pick Solana.
And I agree, and also generally, like Max, myself, and the rest of the research team, we say it's not like one or the others. Like you can be invested in a bunch of different tokens, and each of them have the use cases and advantages. Also, since we're talking about Solana, maybe already promoting our next episode, we're going to have a guest from the Solana ecosystem on the podcast for episode number 2. It's going to be Cash. Officially, his title is Cat Herder, or I think more TradFi. He's the COO of Jupiter, Solana's largest DeFi application and super app. So if you want to learn more about Solana ecosystem, please also dial in next time. But coming back to you, Alex, the last question I have for you: what's a project to watch out in 2025 in the crypto space for you?
I think just as a smart contract platform, and the speed and some of the adoption that's happening, and the way the industry is moving, I think Sui is positioned to do very well.
Thanks, Alex, for your answers on the first 5 questions, which was with our good cop Darius. Now you have the bad cop Max, who's going to be quizzing you even harder on your crypto knowledge. So I think with that said, we can go into the next question, which is, what's one crypto trend that you've been following as of late, or a crypto trend that you don't quite understand as of late? I've given you optionality here.
So something that I've always been quite amused at and found it quite, I mean, it's amusing but also challenging, is some of the terming that's used in the crypto space. So I come from the traditional space, and then suddenly you kind of enter this space, and some of the definitions like sharding, slashing, aping are very strange and foreign to someone who's coming from the traditional space. So trying to, typically you can translate them as something that already exists in the traditional space, but the crypto space has wanted to put their own stamp on things and use their own terms, and some of the terms are just funny, and actually difficult to understand. And they don't need to be so difficult to understand.
Alex, do you have a favorite one of those terms?
Aping.
Is that what you? I imagine that's what you do often on the weekends. You
Yeah.
ape into coins or ape
Yeah.
out of coins. Okay,
Yeah.
I see. Makes sense. I mean, it seems like we need to do a little bit more of internal education on all these crypto terms as well. So that's something for Darius and I to take home too. Cool. Thanks for that
I think,
one.
Max, we should do a crypto glossary of crypto slang as our next research piece.
Exactly.
But this is actually where I think the work you do is so important. Often we'll sit there in meetings and we'll use it. Even like staking. And people in the traditional world often compare staking to lending, for example, which it isn't. And I think we need to work really hard to demystify some of these myths, or what's clear is there is an educational gap between people who are in the crypto world or people in the traditional world, and when they're learning about crypto. So the work you're doing is so important to close that gap, and I think as like a document to define crypto slang is actually a really good idea.
We'll take that away, Alex. Thanks. I mean, that's part of what we do at 21 Shares here as well, right? It's not just about access, but we value as well the education piece that will, tempt and bring people into the crypto space as well. So it's kind of a twofold what we try to do within the research team. So thanks, Alex. Again, we didn't pay him for that. So Alex is just waxing lyrical just because he likes us this much. Beyond that, Alex, what's one crypto stat, but that surprised you recently? Can be good or bad.
I still love the stat that about the person that spent 10,000 Bitcoin on the pizza.
Yeah,
Actually,
exactly.
it was 2 pizzas, so I don't know if it makes it better or not. If you look at Bitcoin's price right now, but at least he got 2 pizzas for the 10K BTC.
Yeah, I hope he's not watching this. I'm sure he feels that moment. Every moment he wakes up, he feels that bit of regret. So, Laszlo, hope you're still out there and doing well. Beyond that, what is your favorite crypto use case at the moment? Or what do you think is a killer use case within crypto?
Tokenization and stablecoin evolution. There's no doubt that firstly, stablecoin evolution is something which is taking off globally. You look at what's been happening with the IPO of Circle, and some of the news recently on Tether, about the fundraise there, and the excitement about the potential for stablecoin usage and the implications that has for various blockchains. And I think that's really exciting. Tokenization, I think, is the other one which I think is going to do very well over the next few years. We already see a few traditional asset managers, actually here in the UK, creating tokenized version of traditional products that they have, and some of them have done very well, especially in the money market space. And I think these are good examples of how how tokenization could potentially involve private market solutions. Even you're hearing managers talk about tokenization of ETFs. So I think that has a lot of mileage ahead of it.
Completely with you there. We are also strong believers that tokenization, stable coins, and representing real world assets on chain is a big trend, but not something that's just hot, but with reason as well. And we strongly believe that over time we'll see the shift to most, if not all, assets being represented on blockchain rails, right? It's a little bit mirroring what we maybe saw. This was probably before my time, but when trading went electronic, people at the beginning used to call it e-trading, right? The fact that it's done electronically. But now we, once again, just go back and call it trading. And I think slowly and surely we're going to get to a stage where we bring assets on chain and we call them tokenized assets. But over time, I think most assets will be represented on chain, meaning that all assets will become digital assets and we'll start once again referring to them just as assets. So I do agree with you that that shift is one of the most powerful ones right now in crypto.
Max, so the way I like to look at it is we are in the midst of a technology revolution. Just like we had the industrial revolution a few hundred years ago, we're now in the midst of a technology revolution, and actually it's all happening very, very quickly. People often forget that just over 20 years ago, we didn't really have smartphones. I grew up in a day and age, and I'm showing my age here a bit, but it wasn't that long ago. I remember having a pager, right? And so, we are in the midst of a technology revolution, and I think what you're talking about here, especially when it comes to the tokenization and this represents the next leg up of the technology revolution. And I think in 15 or 20 years from now, we'll look back and we'll see this is the very beginning of it. A lot of people will I guess we'll get onto this, but a lot of people, will look at what's going on in the crypto space and say, well, is it worth me getting into it right now? Is it too late to be investing? And, I would strongly say no, because I think we're still at the very beginning of the journey. Coming back to the UK market, I think if we did this podcast in a year from now, I think the UK landscape will look very different as well. So I think we have very, very exciting times ahead of us.
I'm with you.
That's why I joined this industry in 21 Shares.
I was about to say that it's not just because you like working with Darius and I, but because the industry excites you as well. So the last two questions, we're on to them now. So for the first one, I think you already kind of touched on this, if I'm not mistaken, but what's one of the biggest misconceptions that people still have about crypto as a whole?
I think it's so on the environmental side, I don't take it lightly. I'm someone who definitely, believes that as a society we need to think about how we can be kinder to the planet. But over the years doing this work, when you start speaking to some investors about crypto, they say absolutely not, because it's not ESG friendly. It doesn't meet our ESG credentials.
Because just that I drop in, when we look at crypto, the social and the governance is very strong when it comes to blockchain's applications, extremely strong. So
exactly. So when people say it doesn't meet our ESG, they're kind of referring more to the E rather than the S and the G. If you actually do your work, and again, this is again why research is so important, why education is so important. If you actually look at what's going on, first of all, outside of Bitcoin, in most other blockchains, the mechanism that's used is proof of stake, which doesn't really leave much of an environmental footprint at all. You could argue that with proof of work, it does leave an environmental footprint, but then actually when you look at it in more detail, you see that a lot of the miners actually do try and think very carefully about how to use natural ways to actually create the energy sources. And you guys will know, you'll be able to talk about this a lot more eloquently and articulate it better than myself. I think it's still a misconception. I think it's going away a little bit. I think, the more mainstream it becomes and the more education's out there, I think people are understanding it might not leave the environmental footprint that it does, but I still think amongst some investors it's it's something where they don't quite understand the way that that mining works.
Maybe just adding to this, Alex, because I did some research back in the day on the topic of Bitcoin and energy. I think a big misconception is something is not necessarily bad if it uses a lot of energy, even though a lot is again relative because we have a lot of different applications in our planet that also use quite a lot of energy. It's more about where's the energy coming from. And with Bitcoin, there's a lot of studies that show that more than half or the majority of the energy that's used for Bitcoin mining is actually coming from renewable sources. So it's not about the amount of energy being used. If you look about the impact on our planet and environment, it's about where is this energy coming from? Yeah. Because if something uses a lot of energy, but everything is really renewable, it's actually fine for our planet. If something uses way less energy, but it just uses fossil fuels, for example, then obviously has a worse impact on our planet. But just like as a side note on this topic.
As I said, you're going to be a lot more articulate and eloquent about it than I am. You just proved that, but exactly.
Yeah, Darius just wanted to show off a little bit there, I think. Cool. I'm with you guys there on that one, and I think it's worth remembering, for miners, they think of this as like a business model, right, as well. So if they're able to decrease the input costs on their side and therefore use natural resources or use existing energy sources such as that they do in El Salvador with a volcano, or such as we see in other jurisdictions where they use Bitcoin mining also as a grid stabilization tool, you see that they do that because it incentivizes them to do that. So actually the Bitcoin network is incentivizing its miners to actually be more, efficient, resource efficient, which actually decreases their costs and allows them to be more profitable. So in a way, it's also it's a bit of a cleansing method as well. Cool. Last question before we get into it. And I think this one should be an easy one for you, but what's one word only to describe the UK crypto scene before we get into today's topic, which is, of course, about crypto in the UK?
Nascent.
Nascent. But just as anything that's nascent, it's bound to grow, right? So that's also the implication here. So thanks, Alex.
I say nascent. A few months ago, I thought when the FCA first announced their intentions to potentially lift this retail ban, initially my thinking was that when this change actually happened, that we would see a slow trickle of money coming into the space. We can go into this in more detail, but the closer we get to the lifting of the ban, the more I actually start thinking that there could be potentially quite a bit of money coming at this as well. And there's a number of reasons for this. I'm sure we'll cover it. But I say nascent, but I actually see building excitement around.
Agreed. And we're just as excited as you are, believe it or not, to be able to be part of opening up the UK market to what we think is a real transformational tool in the world, not just in finance. And we want to be able to also give that to UK soil as well. So it's an absolute pleasure to have the opportunity to do that. And you passed our test, right? You passed questioning, and now we're going to get into the details. So with that said, I think it's worth going into the meat of the episode. And we have a few things we want to unpack. So I'll just be giving a quick breakdown a little bit of the agenda. So firstly, of course, and this is where the main focus is, a spotlight in the UK, how the market has evolved, what's changed from a regulatory standpoint. Then we'll zoom out a bit and unpack a little bit of Bitcoin and Ethereum, led by Darius, of course, to explain what really the benefit is of investing in Bitcoin or of investing in Ethereum and what the value proposition is. And then finally, for dessert, which is what I'm sure a lot of you are more excited for, is looking at crypto's role within a portfolio and how it can actually bolster a lot of more traditional investors' portfolio. With that said, I think we can let's crack on, Alex. I think that's what they say over on UK soil. And to kick things off with the UK itself, and I think what will help level setting is that this isn't the entirety of the market opening up, right? I mean, we've had the professional segment, which has been live for a while. So maybe can you talk us a bit through over what's happened, since the FCA actually banned the UK ETNs for the retail segment, and just a little bit of the regulatory journey that we've seen there.
And maybe just adding, I think because our audience has a like the education level is very broad. Maybe Alex also just quickly explain what's an ETN, because we talk about ETPs and ETFs and ETNs, and I feel like for some people it might be confusing. I feel even sometimes for us it can be confusing because it's like different terminology in different markets. But like in the case of the UK, what are ETNs in general?
Let me start with a little bit about the background of the UK market, and then I'll talk about the ETNs. So the FCA actually announced the ban on crypto ETNs back. It was the beginning of 2021, I believe. So actually, the products were available before that, but they made the decision to announce this ban because they thought that as an asset it was too volatile. Their mandate is to protect retail money, right? So they're regulator, and they need to protect retail investors, and because they thought it was too volatile, they put this ban on. And what that meant is that you were no longer able to buy exposure to crypto in a regulated format. So as a retail investor in the UK, you were still able to buy crypto, but you had to do it via unregulated means. The FCA essentially didn't want to take the risk on, but as an individual, if you wanted to kind of buy it via a centralized exchange or wanted to open your own wallet then you absolutely could. But what's been happening over the last few years is a couple of things. First of all, government data in the UK has shown that demand for crypto has been increasing, and a lot of that has come from the retail audience. And secondly, crypto has become more accepted globally, and especially over the last couple of years. And I think the big change obviously we saw was at the beginning of last year when in the US the SEC approved various Bitcoin ETFs and Ethereum ETFs. Now it looks like they're going to approve other ETFs as well. Obviously in Europe we've had products around for many years, ETPs around for many years. We've seen developments happening in Asia as well, and the Middle East, even in Australia. And I think the FCA, recognised that things were happening globally, but also recognised that demand for crypto was increasing in the UK.
There were just a couple of interesting things that you pointed out that I actually think are worth unpacking a little bit more. And you mentioned the FCA, and they have the job of protecting retail investors, right? Which is a very important role that they obviously hold there. And my understanding was actually when they had banned or curbed access to retail access to these ETNs. It was because they curbed access for the retail segment altogether to crypto derivatives. And so their main aim actually was to curb riskier leverage trading. And because crypto ETNs were actually unfortunately classified as derivatives, they were actually swept up in that ban as well. So it's also the fact that maybe it was and we're in a nascent asset class, so there's always regulatory steps. They are evolving. So maybe it's a side effect of having been, classified as a derivative. Plus now the fact that we see that ETNs altogether, ETPs, their counterparts in Europe have had, multiple market cycles of drawdowns and have continued to function operationally as they should. And now, of course, you mentioned another thing which I think is quite interesting, which is that due to their ban that they, placed in 2021, it has forced investors, UK investors, to chase crypto offshore through unregulated means, whether it's a centralized exchange or through blockchain rails. So I think those two are the things that I've found quite interesting, and I think they tie in quite well because, in our view, ETPs, ETNs, ETFs are a little bit of a more straightforward way to get access to crypto, right? So maybe it's worth expanding a little bit on maybe the potential benefits that you get as an investor when you participate in crypto through an ETN.
Just one response to what you just said. I think it was a very intentional move by the FCA to kind of include crypto ETNs when they did get swept up under the ban of crypto derivatives, but I think it was very intentional as well. Crypto ETNs were part of that. I think our target audience at 21 Shares is not crypto native investors, right? I think for the most part, if you're a crypto native investor, you've been investing in this space for 10 years or more, and you really understand how it all works, and you actually have a large allocation. Typically you are going to be trading through centralized crypto exchanges. You are going to be doing it in your own wallets, and but I think here we are really trying to help investors, traditional investors who are trying to allocate part of their portfolio into crypto without the need of having to do it via a centralized exchange, opening their own wallets, worrying about passwords or keys. They can just do it in the same way as they invest in a regular equity or a bonds. And I think that is the big benefit of an ETN. Our goal at 21 Shares has always been to help investors onto this journey using the most with security, safety, very much central part of the way that we manage our products. Risk management is a very important part of the 21 Shares business, and ultimately we're only here because our clients entrust us with those assets. So safety and security is paramount to what we do. The journey in the UK of lifting that ban on retail, I guess, started about 18 months ago. It hasn't just started now. Back at the beginning of 2024, the FCA actually announced that they were going to open a professional-only segment on the LSE. So we were the first issuer to actually list on that professional-only segment. So actually, we're not new to the London Stock Exchange over the last couple of years. We've been there, and actually, we've done very well on the LSE. We've successfully captured the majority of the flow, even though it has been quite competitive. There are 8 issuers now listed on the professional-only segment of the LSE, but we were the first ones. And this lifting of the ban now is just part of that continuation of that journey. So it's just going to start with Bitcoin and Ethereum. To your point, Darius, I do want to answer your question. What is an ETF versus an ETF? I think many of the listeners here will know what ETFs are. Maybe ETNs they're less familiar with. They are quite similar. So technically the difference is it's a legally a different structure. So an ETF is a fund, an exchange-traded fund. An ETN is exchange-traded note and is essentially a debt obligation, a debt instrument. But you're still getting exposure to the underlying assets. With the ETNs that we have, they are 100% collateralized by the underlying assets. So if you decided to buy the products on the LSE, a Bitcoin or an Ethereum product, the underlying asset is still Bitcoin, it is still Ethereum. You're still ultimately holding Bitcoin and Ethereum, and those assets are held by independent custodians. They're ring-fenced away from 21 Shares. There's even a layer of insurance there with the custodian. Instead of getting exposure to equity or fixed income, it is a digital asset, but they're very similar, ETNs and ETF.
Thanks for that. You've done your homework. I see, Alex. It's good that you know, of course, what the products are that we offer anyways. But it seems to have a lot of benefits, particularly for traditional investors, right? They don't want to go on unregulated platforms, nor even the first question is, do they want to open an account altogether on a different platform? For a lot of that causes a lot of bureaucratic headache, let alone the concerns with, asset security and tradability, etc. So it's even a question of access and just from the first level of getting exposure anyways. And now I guess the real answer is, or I guess the real result is that the UK is finally catching up with Europe, which, as you mentioned, has had an offering for now the last 7 years actually, and now the US, which obviously launched at the start of 2024, and we saw a lot of euphoria with the US launch. We saw, I think it's up to around 180 billion assets under management, north of 60 billion in net new flows in just a year and a half, maybe a year and 3 quarters. Which is really, really impressive. And now we see that the UK, might be late to the party, but for those of you, who play football, we all know that substitutes are important as well, even if they make it to the game a little bit later. And it's arriving at a moment where appetite in the UK is ripe. You mentioned that that's already the case, and I think we now have approximately nearly 1 in 4 Britons that actually own or interact with crypto. So it's quite clear that there is evidence of growing, retail familiarity there.
One thing I would even say to a crypto native investor in the UK, looking at the ETNs versus trading directly, is that if you hold a direct crypto asset in the UK, you're ultimately going to be subject to capital gains tax at the end of the year. So now when you fill out your annual tax return in the UK for HMRC, so that's the tax authority here in the UK, you have to declare your crypto assets. There's a special section on there, and you have to pay capital gains tax on it. I think one of the big benefits of the ETNs that are coming to market here is you will be able to hold them, or our understanding is you will be able to hold them within a tax-efficient savings bubble or a tax-efficient even pension bubble. So if you are a long-term holder of this and you want to hold it in the most tax-efficient methods, these tax bubbles are the best way of doing it, and you can't do that when you trade through a direct, when you trade it directly on a centralized exchange, but you can do. If you're going to hold it via an ETN. So I think that actually will be a big advantage of the ETN.
I think that's a very good point to mention, Alex. Thanks for that insight. And aside from the benefits of having the access, I think what is also clear, in the US, there has been a lot of demand. I think right now, if you compare the crypto ETF, crypto ETP market from the US compared to the overall US ETP ETF market, I think it's already covering around 1%, 1.4% of the total market, which is just really, really, really impressive. And I'm just wondering, do you expect to see similar flows in the UK? Do you think that it will be a little bit less of a fast rise as we saw with the US numbers in terms of flows? Because when we did a quick analysis, and it's a very simple one, but we just did a addressable market analysis comparing the size of the US to the UK market, which is, of course, a little bit smaller in nature. We kind of projected that it could be possible to see around $15-20 billion in flows in the near term, being the next 1-2 years. Of course, that's just a proxy. We know that the US market attracts a lot of global capital anyways, including UK investors. So the rate of penetration might even be higher than that. But since the professional segment already opened up, some of this capital may already be parked in these kind of products. So just curious to get your understanding on the demand side and what you're expecting to see on the ground there.
Yeah, of course. I think it's difficult to know for sure, Max. The other thing that's happened over the summer is that since the FCA's come out with this announcement, the number of meetings, calls that we've had with engagements has grown exponentially, and we've also had a lot of RFIs come in. Our RFIs are requests for information, or some people know them as due diligence questionnaires. It's been really interesting to see that over the last month or so, the number of RFIs and DDQs we've had come in from not small UK managers, but some of the largest UK managers, some of the larger global wealth managers. There's no reason to think that things won't work out normally. I mean, the crypto ETPs, as they're known in Europe, have been around for many years. They've been through different cycles, and we've seen that even in the most volatile times, they've done what they've meant to do. Yes, crypto is very volatile, but even in the downward cycles of 22, when the market was dropping, the products did what they were meant to do. So we know ETFs work, we know ETPs work. There's no reason to think these ETNs won't work. So I think the market will open up, but it will take a little bit of time.
I'm just gonna add to that, and I guess Darius and I, we could talk about this for hours, right? That's why we work in the research team. But for Bitcoin, I really think that, one thing is that we can all say for a fact is that the core fundamentals of Bitcoin haven't changed and have been in place since its creation. In my opinion, what's changed is actually who is catching on. And I think the real difference there is particularly on the corporate and on the national and institutional level. We now have corporates that actually use Bitcoin as a strategic reserve asset. Nation states are also starting to follow suit, and we've seen a few in the US, for instance, that actually launched their own state level Bitcoin strategic reserve. And so you have this institutional and sovereign demand, which is coinciding with Bitcoin's scarcity. And if you already think of, Bitcoin being that hard asset, the next generation, of gold or the digital equivalent of gold, then against the macro backdrop, that becomes even more interesting because, what we've seen is that hard assets have become a lot more in demand as well. So if you agree with one, then you should definitely, be investing in Bitcoin because of two, right? Because the macro situation warrants you having a hard asset within your portfolio as trust and safe haven assets, typically like the US Treasuries, are starting to dwindle a little bit. So on that front, I think that the fundamentals are interesting, but the macro situation make it an even more interesting investment as well.
I think one thing you make a very compelling case. You do a great job kind of explaining the reasons, why Bitcoin, why Ethereum. What's been very clear from my conversations with investors in the UK is that there are still a lot of myths around, what is Bitcoin, what is Ethereum, and I think there's still so much education that's needed. People think they know what it is, but actually, when you scratch beneath the surface, you see very quickly that they don't really. They need to spend time analyzing it more, and I think this is what you guys do so well. You help demystify and articulate crypto to a non-crypto type audience. So in terms of allocation, I think it's going to depend on your level of education. We have a product. I know we can't talk about products in particular, but one of the exposures that I really enjoy talking about to investors in the UK is a product that has both gold and Bitcoin in it. The UK is a big market for gold, but we often describe Bitcoin as digital gold. So it's a fascinating conversation when you start speaking to people who are invested in gold, and then you start talking about Bitcoin and making the connection between the two. So that's kind of a very good audience for us, is kind of the gold audience. But Darius, in terms of the allocations, it's really going to depend investor by investor. If you're asking me personally, I think probably a 5% allocation is about right. But that, again, that's gonna vary wildly depending on what your portfolio looks like and what your needs are. What do you think the right allocation is?
I'll be happy to lose some words here. It's funny because when we talk to, more traditional investors, it's almost like the mirror opposite of how I construct my own personal portfolio. But that's not to say that my portfolio is any good, because otherwise I'd be lying on a beach instead of being in this podcast room on a Friday morning next to Darius. But nevertheless, I'd be happy to lose some words here. I think the question comes down to two things for just a traditional, retail investor. Is the first one is diversification. When you're building a portfolio, you don't want to construct one that has many assets that move relatively in the same direction to one another, because then if, problems arise within financial markets, all your assets will tend to one or tend to zero. And so you want assets that are, not amplifying already existing risks. And I think what we see in the crypto space here is, if you look at Bitcoin, for instance, if you zoom into Bitcoin specifically, with the US equities, so from the growth side, it has a very low correlation, or very modest one, at around 35, 37%. But we've also mentioned that Bitcoin also has a role as, a store of wealth, as a store of value asset. And here with gold, it also boasts just a 11, 12% correlation with gold on a monthly time frame as well. So then here you see the profile of Bitcoin, that the upshot is not just a store of wealth asset, but it's also a growth asset that is going to continue to grow in tandem with the rest of the industry, which we also believe will continue to grow. So it's a very interesting asset from a diversification perspective because it's a bit Jekyll and Hyde. It doesn't really play one role or another. It's still an asset that's evolving, but that's not something that's a flaw, but it's something that is a bit of a feature of it, and you can use that to your benefit in terms of portfolio construction. With Ethereum, it's also a very similar case. Still boasts low correlation with traditional assets, but given that we've explained Ethereum as more of a foundational technology for, operating on blockchain technology at a very high level, you would expect its correlation with, from a, cumulative and annualized just return perspective, obviously it will improve your portfolio. It's been the best asset performer for the last 10 to 15 years. So that's a no-brainer. But I think what's more interesting is looking at the risk-adjusted outcomes. You see your Sharpe ratio improving, you see your Sortino ratio improving as well, which only come with a modest uptick in volatility. And just one thing on volatility, a lot of people have a misconception that volatility is bad. And I think oftentimes when we talk about volatility in that sense, we're talking about downside volatility. But we did a little bit of a deeper dive into Bitcoin's risk profile, and you see that most of its volatility is coming from a right skew. What this means is that most of Bitcoin's volatility is actually upside volatility. And so its risk return profile is quite interesting because its volatility on the downside is a little bit more muted than it is on the upside. So when we talk about volatility, it's often important to look at what side is the needle moving. So there as well, we see that the risk-adjusted performance is really impressive, and it has a very asymmetric return profile. If you add Ethereum to that portfolio as well, you see a similar result in that cumulative returns are improved, but performance is also improved on a risk-adjusted basis. And altogether, your portfolio seems to be more than just positively impacted, but actually you should definitely be including crypto in your portfolio. And just my last nugget of information on here, I feel like I've gone on a bit of a monologue. I think it's important to just remember one thing. Most investors, just passive investors, are neutral investors, right? They want to track the market. They don't want to take directional bets because they're not involved in the financial services. I too like to invest in indices because I don't have a directional view on every single asset in the roof under the sun, right? So one thing that's important to remember is that crypto at the moment makes up just shy of 2% of your portfolio. I think it's of the asset class, of the asset market cap in the world, right? Crypto represents just 1 or 2% of that. What that means as a neutral allocator means that you should be choosing 1 to 2% 1 to 2% of crypto within your portfolio as well. If you choose zero exposure, you're not neutral. It is actually a bet that the entire industry will shrink or cease to disappear.
I think that this change in the UK, I think, is really going to be a catalyst to spur on the industry in the UK. I think that the crypto conversations are going to become much more normalized over the last few months. I can tell you that having been here for the last 4 years, there are a few managers that I would reach out to a couple of years ago who didn't even want to really had any interest in meeting. The response was very much, look, there's nothing we can do for, internally or with our clients. So what's the point in having a meeting? That's very much flipped around now. As I said, I've seen more requests for information from us over the last 6 weeks than I have done over the last 4 years, over the last 4 years combined. So I think that's going to accelerate. It's going to become a much more normal part of the conversation. The UK is home to one of the world's largest asset management industries, definitely the largest in Europe. So I think you're going to start seeing some of the portfolio managers within the multi-asset teams allocate to crypto, and that's going to become a lot more normalized. And You know, you mentioned pension schemes as well. Pensions aren't really looking at this at the moment, but some of the conversations that I've had with consultants here, we have many layers here of consultants who really advise these pension schemes, but some of the consultants are starting to indicate that they may also start seeing demand from their clients, and pension funds may want to start allocating as well. So, you know, I think it's going to look very different. As I said, there's going to be more issuers, there's going to be more products, but I also think the number of clients that we see investing is going to increase as well. It's going to come from more segments in the market. You know, I think one interesting proof point is to look at the 13F filings from the US. You can see over the last 18 months in the US the evolution that we've seen over there. The first 13F, most of the assets were coming from prop desks, from hedge funds. When you look at who's holding Bitcoin ETFs in the US now, it's coming from state pension schemes. It's coming from sovereign wealth funds. It's coming from global wealth managers, family offices, firms that weren't even thinking about allocating to the asset class a few years ago. We're going to see the same happening in the UK. And it would be great to sit down and in a year from now, at the beginning of October 2026, and we can have that discussion. Thank you. Thank you all. And keep up the good work, guys.
Very insightful to learn more about the UK perspective, how you see things develop, to learn more about yourself, your journey. Also very excited that this was the reason to join 21 Shares, and now it's actually happening. So I think it's also going to be a very exciting time for yourself. For all our listeners on the podcast, thanks for dialing in our first episode. Please like, subscribe, share, and on all socials. We're gonna publish an episode every 2 weeks. The second episode is already scheduled. We're gonna have Cash from Jupiter on there, so if you want to learn more about Solana, which we also briefly talked about, besides mainly Bitcoin, Ethereum, which are the main topic areas for the UK or today's episode, please dial in again in 2 weeks. Until that, again, thank you all for participating, for dialing in. It was a blast. Looking forward to the future episodes. And with this, peace out from my side.
Thanks, guys.